attendees, welcome to this Creative Zone webinar. Today's topic is on 2021 real estate outlook. We have with us three incredible speakers and part of the real estate industry here in the UAE and in Dubai. Abdullah Alajaji, founder of Driven Properties, John Lyons, managing director of Espace Real Estate, and Richard Waind, the group managing director of Betterhomes. Abdullah, John, and Richard, thank you so much for connecting here with us and sharing a bit of your knowledge on this topic.
Thanks for having us.
So perhaps we can get started with you, John, since you were part of helping us put this together in a way and connecting us with Richard and Abdullah. Maybe take us a little bit, how do you feel is this stage that we're living in? What's the outlook so far for Q1 and these first four months of the year?
Yeah, I think it's an incredible, if you look at the real estate market, it's an incredible market to be in. I think that if any of us were to be truly honest with ourselves, this time last year, we would not have guessed that we would be where we are at this stage of the year. And given the fact that the pandemic has effectively gone on a lot longer, I think, than most people thought, but the rebound has been much stronger than most people thought as well. It's an interesting dynamic. But to give you some context of how the market has really rebounded and performed incredibly well, if you look at the number of properties changing hands, there's more properties changing hands in the market than at any time, I think, in the last 10 years, really. And to give you some well-known areas, Dubai Marina, for example, if you look, let's not compare the first 4 months of this year to last year, because obviously it was a low year last year. We were already deep into the lockdown and the pandemic. But if you look compared to 2019, when I think everyone would agree that Dubai real estate was stuck in the mud a little bit, there's 120% more properties changing hands in Dubai Marina for sale now than there was in the first 4 months of 2020. In well-known communities, villa communities like the Meadows, it's 80% more properties selling today than was the case in 2019 for the first 4 months. So the amount of activity is huge. The amount of sentiment rebound in the market is huge, and valuations are rising as an effect of that. So I think there's a lot of positivity.
Is that usually for end users, or is it for as an investment vehicle? Maybe I pass on to you, Richard, and you can pick up from there. Is it for end users, for as an investment option?
I think both. We're heavily, as a marketplace, we're heavily reliant on investors, but probably the turn of the market, and I would actually track it back to before COVID. In fact, I agree with John. If you look at the numbers in 2019 to today, they're sort of night and day. But probably in November 2019, most of us started to see a bit of a pickup, and through November, December, January, and February. I mean, you can go back and look at some of our social media conversations and our output back in February last year. They're all very positive. The sentiment was actually very positive, and that was largely, I think, led by end users. I think that was residents here in Dubai twigging onto the fact of the values that they could see if they're buying, weighing up their options versus renting, and actually thinking, after 6 years of prices coming down, now's a pretty good time to buy. I think that was slightly supersized then by COVID. We went into lockdown. We spent 6 or 7, 8 weeks staring at the same four walls. And I think globally, that had then the impact of people looking at their home, looking at their living arrangements and placing perhaps a higher value on where they lived than prior. And that then has created a bit of a buyer boom, particularly in the end user market. As soon as that's happened, as John says, demand comes in, prices start to creep up. Investors start taking notice, don't they? So, I think, it was led in part by a resurgence in end users, but certainly there's lots and lots of investors coming out of places like Europe at the moment, looking at the high-end properties, which I'm sure we'll talk about. So I don't think it's one or the other. I think it was certainly led initially by a real emphasis in the end user market, but certainly there's a lot of investor interest at the minute.
Abdullah, what would you say are the main reasons for this pickup in the price? Is it to do with the fact that suddenly Dubai was a bit of the place to be for this rich and wealthy sort of individuals that were escaping lockdowns in Europe, and then suddenly we saw you know, this surge in hotels that suddenly you couldn't find a hotel room available over the weekends here in Dubai. And has this been the contributor of why suddenly people picked up on Dubai and said, wait a minute, I think the Dubai market it's very reasonably priced and it's a good time to come in and invest?
I think partly. I mean, that partly explains the dramatic push. But I think there are several different factors that came into play. Interest rates are at their very lowest levels, you know, in the longest time. We haven't had LTVs of 80 or 85% in Dubai for, you know, in the last 10 years. In time, prices were at kind of a very affordable essentially, and prices have come close to replacement value in some communities. So developers did not have an opportunity to develop, or the development margins have shrunk. And you know, with the increase of supply over the past few years, the government has taken very, very conscious and strategic decisions to kind of clamp down that supply and reduced the rate of launches, you know, with the largest developers. You look at Emaar, Miras, Dubai Holding, and Nakhil, and all the government they created that in 2019, which clamped the supply. The secondary market fuel and attract demand for end users. And then to your point, Lorenzo, the way Dubai dealt with the pandemic, and that it kind of started a vaccine rollout that is very effective, at the same time opening its borders to tourists, that attracted the affluent, the rich, you know, the famous, and from places, and specifically from Europe and Russia in the past few months. That fueled the demand in the ultra high end market. I think we can all agree that you know, there wasn't any period in Dubai's lifetime where you know, $10 million plus homes are transacting at these rates and at this kind of with these kinds of volumes. So if I'm an affluent European, and I like to spend my winter in Gstad or in Courchevel skiing with my family, I didn't have that option. You know, and Dubai is somewhere I didn't see. I come to Dubai, I can see that one of the best penthouses selling for $10 million. You know, why not? And I like this place and I enjoy it. And I think to myself, you know, that's a place that I'll come to again. I'll buy myself a holiday home and live very, very nicely. So we saw that trend evolve, and I think that we're just scratching the surface, because the Saudis have been in lockdown. They haven't been able to come in, and they're some of the most traditional buyers. The Chinese as well, their movement was restricted, and these again are some of the most the highest growing markets for investment as investors in Dubai. Indians as well haven't been as active. Most of that dramatic push was coming from Europe and in Russia. Yet we're still waiting for that demand to come from other markets. So I think these factors combined resulted in what we're seeing today.
That's a very good point. And so then maybe, John, do we feel that as we get closer to sort of things opening up, this will actually bring a further wave into the market? And then I'm starting to see a few questions coming through from the attendees. We have over 70 people connected. Please feel free to send your questions out either in the Q&A section box or the chat section here on the right side. We actually have already a good question on Bitcoin and cryptocurrencies. So I want to combine that question to you, John. The issue of if the market starts opening up, and as Abdullah says, more people from China, from India, from the different parts of the world are going to start coming a little bit more from Saudi Arabia, that right now they're in lockdown. Will that increase? And let me bring into that cryptocurrencies. Have cryptocurrencies really pushed things up? Do you have people showing up to buy these $10 million homes and you are thinking, is this crypto money and so on? So how can you give us a bit of an idea on these two things?
I mean, firstly, I think if the more open the global economy becomes and the freer that travel is for everyone, then you know, the more people are going to flow into this great city. And when it's on show, as Abdullah has mentioned, people who have money, a percentage of them will decide to buy here. They'll decide to set up businesses here, and that drives it drives capital into this city, which obviously increases demand. But in turn, you know, to come to your point on Bitcoin, I don't think it's just a story of Bitcoin or cryptocurrencies. It's a story of a massive increase in liquidity in the global economy, and I actually think that it is. You know, the stock markets are basically at all-time highs. Okay, they go up and down a little bit from day to day, but they're pretty much at all-time highs. There's a lot of liquidity around. There's a lot of cheap credit around, as was mentioned earlier, with the mortgage rates being at the lowest they've ever been at. But also, I think there's been a dislocation in the usual flow of capital within the economy. So what I mean by that is, where a lot of industries have been hit extremely hard, other industries are benefiting from that. And that's because, let's say, the travel industry, no money's been flowing into the travel industry really in the grand scale of things. That money has been building up effectively in people's accounts to be spent elsewhere. So when Richard mentioned that, you know, people stuck in the lockdown are staring at the same four walls and it focuses the mind, that gives them the willingness and the desire to buy. What's given them the ability to buy is the fact that there's more money in their account, because a lot of the fiscal response to this was to allow people to put freezes on their mortgages, and just more money was storing up. If you look at the central bank money supply data, you can see there's a lot more money in the system. There's quite a lot more money in the system compared to last year, the beginning of last year. And that money is flowing in to the directions of the economy that can take it. Now, travel is not one of those directions at the moment, but real estate is. And I think that with all of this liquidity around, more desire to own property is ultimately what's driving a lot of the increase in activity in the real estate market. Bitcoin is just a little bit of a side note. I think that Bitcoin is also doing well because of the additional liquidity that exists. So, you know, probably some of it filters into Dubai. I'm sure it does. We do hear of wealthy crypto entrepreneurs, millionaires, whatever, they buy property here, but same from many other industries as well.
Good points. Richard, anything on these two topics?
I agree with John. I think whilst the pandemic's not been a good thing in any stretch of the imagination, there are, as John said, there's been winners and losers in terms of industries. And frankly, people have been looking for places to put their money. People have been looking for returns. You know, yeah. Globally, returns for a lot of investors have been squeezed over the last 3 or 4 years. And I think people are seeing opportunities now post-pandemic, one of which are things like, you know, Bitcoin. I was reading this morning about the bedroom billionaires that are making loads of money out of FX and Bitcoin. As John says, I do sometimes think that it's a bit of a footnote, a bit of a distraction in some regards. Yeah, we'll do some deals with people who've made a lot of money in alternate investments. But one thing I do think is interesting, though, you know, we're talking about capital and flow and a lot of money. There's also a bill to be paid, I think, from the pandemic, particularly in places like Europe. And I do think that is playing into the minds of a lot of high net worth individuals in places like Europe. They're looking at what is likely to come down the line in terms of you know, fiscal responses to the pandemic in the EU, in the UK in particular. And I think that is possibly also playing into a bit of the capital flow coming out of Europe into places like Dubai.
We've seen an important surge from our side of the business at Creative Zone in terms of people setting up new companies and setting up businesses, whether it's for investments. In many cases, we've seen people are setting up special vehicles like holding companies, foundations, even for the purpose of real estate investments. Is this a type of structure that you've seen become more popular nowadays? What percentage I would think of investors are setting up or buying property through investment vehicles instead of just putting it on their names directly. Abdullah, Richard, you guys have any information on this?
Yeah, I think even if you look at the data from the Department of Economic Development in terms of new businesses being set up in Dubai, that has increased significantly Q on Q, and particularly for the reasons you mentioned. And a lot of the I think if I don't have exact numbers in hand, but if I look at just evidence from our own transactions, the number of transactions that happen through offshore JAFZA entities or companies that are domiciled within the UAE that are purchasing property, especially in the high-end segment or in the kind of bulk segment where you're either buying floors or for investment in particular, they're more likely than not to be bought through either companies, and recently we're looking at foundations that are buying large sums. So again, for tax purposes. So that's a trend that we started seeing in a big way.
And what about residency visas? That we've got here the golden visa programs that was introduced as well. I believe an investor can buy a property worth from $1 million to $5 million. You get a 3-year residency visa. Over 5 million dirhams investment gives you a 5-year visa. And I think you have an investments worth 10 million, you get a golden 10-year visa. Is this something that investors are pursuing, investing in property for having this residency visa? John and Richard, you've been involved in this type of transactions?
Yeah, definitely.
So it comes up regularly. I mean, our guys are having conversations about this a lot. I mean, it was announced, I think, originally back in 2018 with a bit of fanfare and then very little information. Then it was sort of re-announced at the back end of last year. The other visa thing that has, I think, been very beneficial is the relaxation of sort of long-term holiday visas, for want of a better word, but where you can live here and spend the winter over here and work from here. So there's been an awful lot of people who have spent the winter working from Dubai, particularly from places like Europe, who have, as I think John was saying, sort of seen Dubai for the first time potentially, or seen a different side of it, and then are thinking of putting down roots or making investments here. So I do think the visa relaxations will continue to play a very big part, and particularly if you look at other expat cities around the world. If you take, potentially Kuwait or certainly Singapore or Hong Kong, where they've potentially been a little less attractive or looking to attract expats in. They've been a little bit more looking at their own local population, putting them first. Actually, I think Dubai has really pushed on to become more open, more inclusive, more attractive to bring people in. And I think that the story of Dubai will look back at this period, and actually they took advantage of the opportunity very, very well by attracting people in.
Excellent. John, you had something on this too, yeah?
Yeah, I was just going to say that we do experience quite a lot of demand from people who are interested in the fact that they can get a visa when they buy a property here. But I'm not sure that it is that they're buying the property because they really want the visa. I think the visa is just something that makes it a smooth process to spend time here, and they would maybe buy a property anyway, and it's just part of the whole ecosystem of what Dubai is trying to create, which is a great place to spend time, a great place to be. We all enjoy, we all live here, we enjoy spending time here, and the more time you spend here, and the more you realize why lots of people from all over the world will want to spend time here when they come here. And if you're going to spend time somewhere, and you've got the money, you're going to end up buying a property, a holiday home. And if that gives you the visa that allows you to spend the time, then it's a nice circle. It all comes together very nicely. But in the end of the day, Dubai's done an amazing job to just fundamentally make this a great place to be.
Indeed. Excellent. Well, we have 80 people connected. I see quite a few good questions coming through. A topic that is recurring in the questions, maybe Abdullah, I can address this to you to get started, is the issue of short-term rentals and holiday homes. This has been quite a topic at the beginning of the year with some of the announcements that were made. Is this an avenue now that investors are shifting towards in terms of putting their properties in short-term rentals or holiday homes as a way of getting a better return of their investments?
Absolutely. I think it's not just better returns, it's liquidity as well. There's many different benefits for short term. We're seeing a shift in that kind of co-living and co-working side of things, where it starts in San Francisco, goes to Europe, and now starting to appear in Dubai. So with short-term living and also with co-working spaces, that gives consumers flexibility, especially in difficult periods when the world is in a pandemic, and in some cases jobs are not as secure as they were. You have a lot of consumers elect to go for the flexibility of short-term rentals. This is from a consumer side of things. I'll get to the owner side of things, but consumers are more and more now electing to go for short-term or flexible rentals, so that they can break their contract in a month. They pay on a monthly basis. They have all their utilities paid, and if they decide next month that they want to go somewhere else, or they want to relocate, or they lost their job, then that gives them that kind of flexibility. We've seen that surge also in office space, where co-working spaces have done exceptionally well during the pandemic, and then leading up to where we are today. There is a shortage of quality co-working space in Dubai. So that all ties into the short-term kind of element of working and living at the same time. Now, from an owner's or investments perspective, yes, the returns are higher for short-term, because it's the daily rate and the monthly rates are normally higher than what it would be on an annual basis. The other advantage is the liquidity that the short-term rentals achieve. So if you're stuck with a tenant, and tenants tend to get sticky here in Dubai, where you would have to renew year on year, and the tenant has the right to further their stay. So on the basis of that, if your apartment is operated on a short-term basis, that gives you the liquidity. And there is a premium to liquidity as well. If we all know that vacant apartments and ready for occupation trade at slightly more than apartments that are tenanted or rented here in Dubai. So that keeps that premium going. And I think with the trend of the co-living and co-working transpiring and growing, we see that the holiday homes market also growing at the same pace.
Richard, is this something that Betterhomes has gotten involved in?
Yeah, we've been doing short-term rentals now for about a decade, and for all the reasons Abdullah's just given, it can be a very, very attractive and lucrative option on both sides. Tenants like the flexibility of it, and what we're actually seeing is what we're now calling the long-term short-term rental, where actually it's somebody taking a short-term rental and paying by the month, but they're taking quite a long-term view on it. They just don't want to put down one check, and they like the fact that utilities are involved and all the rest of it, and it gives them that flexibility if they can move out in a month. But we speak to a lot of landlords, and again, short-term rentals over the last few years has got a lot of press, it's got a lot of headline coverage. It's not for everybody. It is great, particularly classic short-term holiday rentals would be you own a property here in Dubai, you want to use it 2 or 3 times a year. If you want to use it as a family 2 or 3 times a year, the rest of the year you rent it out as a holiday let. That's sort of classic model, and still works exceptionally well. If you are just buying a property, you want to get the best return on it, you have to then factor up dilapidations on the furnishings. You've got to factor in the utilities. You've got to factor in the licensing costs. You've got to factor in the management costs. So it may be actually that you put all those costs in, and you'd be better off with a long-term rental. And I think that is the case for a lot of landlords, that they would be better off with long-term.
I guess the location also plays a prime role on that, right? I see holiday homes doing better in areas closer to the beach and so on.
Yeah.
Right?
Yeah, absolutely. Yeah. So we were speaking earlier about the Palm, weren't we? I think holiday rentals on the Palm do exceptionally well for obvious reasons. We used to do very, very well with not holiday rentals, short-term rentals in DIFC and downtown. That market over the last period of time has struggled a little bit for obvious reasons. There's been less less business travel. But I think it will pick up, you know, as flights start to move again. So, but I think it's a great option for landlords. I think it's a great option for tenants. But you need to do the numbers. You need to make sure that it is the right thing.
Excellent. I can move on to another topic that I can see some questions on. The UAE has signed the Abraham Accord with Israel back in September last year. That really brought a surge of interest from both nations. John, have you seen an increase of Israeli investors investing in properties in Dubai?
Yeah, definitely. It's a great move, I think, for the region. Brilliant that it comes, you know, on the back end of the year of tolerance, which I think was 2019. So it's great that a year of tolerance is then followed with real action. And we sold a couple of days ago a property in downtown for 7 million dirhams to an Israeli investor, and the seller was an Iranian. So it tells a story of tolerance. And we're seeing Israelis now taking a real interest in this city. Yesterday, I had a Zoom meeting with an investor from Israel who's very interested in putting quite a lot of capital to work in the city. So definitely, the Israeli investors are coming for sure.
Excellent. Abdullah, any thoughts on this?
Yeah, I mean, I'll echo John's sentiment and statement in that it's great for the region. It's been it added further kind of fuel to the already positive sentiment in the real estate market, and that's, I think, part of why the market has moved. And we're seeing more and more investment coming in. You know, that we started with tourism. I think we had a very, very busy December and January with Israelis touring Dubai and having spending New Year here. And then on the as they enjoyed the lifestyle in the city, then they started making their investment decisions. So we're working with a number of investors. A lot of them have already bought and mostly waterfront properties. But also you're seeing large operators of holiday homes that are based out of Tel Aviv that are looking for large opportunities here to operate full buildings. So it's interesting to see that kind of demand coming from there that would otherwise not that we would otherwise not have. So that will add to the demand cycle as well, and help the market further boost that momentum leading to Expo.
Excellent. Richard, any experience with the Israeli investors?
Yeah, particularly actually in our commercial team. So our commercial team is called CRC, and they've done a number of deals with general trading companies and a couple of other companies out of Israel that are setting up over here. So that's really nice. That's people really investing and really putting their lives into it, aren't they? They're bringing their businesses over here, and I think that's a really, really great sign for the future.
Interesting. All right. Another point I wanted to raise today. I am aware that the three of you are involved together with a set of other partners with an interesting new portal for real estate listings, if I could call it. John, can you tell us a little bit about this project? I believe it's called Hausa. What's the objectives behind this project? What can we tell the people looking at this webinar?
Yeah, Hausa is a new portal set up last year. And it's a collaboration of real estate brokerages, either as shareholders in the new company, or through an extensive network of companies. There's well over 100 brokerages already on the site, using the site, generating leads from the site. And what we're trying to do is just bring more choice to the industry, and a collaboration of ideas from the sharp end of the market, being the brokers, should hopefully result, and it is resulting, in new products that we know the consumers want. And we've got a great tech team that are very experienced, international quality tech team that are very experienced in online marketplaces, and they're delivering some great products. They're building a great platform. There's a lot of work going in at the back end of this product, and it's growing, and it's exciting because at the moment, really, there's only two players, or there was only two players of note in the real estate portal space in Dubai. in the UAE, and now there's a third. So it gives more choice, and hopefully it will keep costs down as well for the brokers, and it will give consumers what they want.
Excellent. Abdullah, anything on Hausa?
Yeah, I think both on the consumer end, there's a number of things that obviously we know, and our consumers suffer from and other portals, and we try to address these flaws through our own experiences, being the on the ground guys that actually see these challenges day in, day out. The portals that are in the portals on the ground, right? They and the UX without giving so much attention to the things like the data that a consumer needs. Hausa addresses that extremely well, and that you can now see exactly what the transactions that happened in the community you're looking for, what the service charges are and that building that you're looking for are. If you're an investor, how much as a return used to. So I think on the basis of that, Hausa has created a platform that's great for consumers. In terms of the brokers, I think the network effect, and that Hausa tries to bring in several prop tech tools that makes an agency's journey much easier, and that they provide the data to an agent. They provide solutions on the CRM space, so that your customer relationship systems are managed, and also in a cost-effective manner. A partnership was struck with Unwrapped Media to do 360-degree tours on any property that is listed on Hausa at a fraction of how much it would otherwise cost if you do it the conventional way. So that kind of ecosystem that Hausa tries to build, I think, works very well for brokerages and for consumers, and I think that's what the market really needs right now.
Excellent. On that point, I've seen some incredible technology nowadays. Even they do this video filming with these tiny drones that they go through the entire property, and it really makes a lot more efficient the issue of having to go and show properties. I think as an investor, you can have a pretty decent idea of what is that property going to look like before even getting there, right, Richard?
Yeah, absolutely. I mean, my life in real estate goes way back to 2003, when we were selling houses by the newspaper. We still, I remember every Friday we had to get our hot properties in because they were going to press. And that wasn't that long ago, 2003, where are we? So 18, 19 years on. And incredibly, we talk about tech, and we talk about, how tech's changed communication, but it's those little things, the actual day-to-day jobs, photography, videography, has revolutionized what we do. And people, you're right, people anywhere in the world now can do a virtual tour of most of our properties. They can have a feel of it and perceive it. I don't think that takes away from the majority of people then wanting to come and physically see the property. We've seen that with even the large taking place tend to be people who have been coming and flying in to actually physically see it, because there's nothing takes away the wanting to sit in there, feel it, and smell the property that you're going to be buying as well. But yeah, absolutely, it's changed an incredible amount. I mean, if we could just go back to Hausa very, very quickly, just to reiterate what my Hausa colleagues have said. This is something that actually came together during the pandemic, and for me was a really exciting and interesting thing to watch as the industry came together in a difficult period, very, very difficult period. And actually what came out of it was some of the very best brokerages in the city coming together for the industry to try and resolve some of the problems for the industry, but as the guys have said as well, try and resolve the problems for the consumer. Now, I've just bought a house myself in Dubai, and being on the other side of the fence for a couple of weeks, that again gives a little bit of insight. And where I think Hausa will really help over the coming years is help work work alongside the DLD, work alongside REA, really make sure the quality of brokerage, the quality of listings is as high as it possibly can be, because that's in our hands. If Hauser is run by brokerages who want to do it the right way, then I think that could only be a good thing for everybody.
Excellent. Well, Expo 2021 is around the corner to get started in a few months. John, what do you feel will be the impact of Expo 2021 into the UAE and the Dubai economy and real estate in particular?
Well, let's hope that the travel restrictions allow for a lot of people to come here. But vaccination campaigns are well up and running in many countries around the world where we would expect travelers to come. So I'm sure that there will be many people will come here, and the city will be on show. And the more people that come, the more people will realize what we've already realized by all living here, that this is an amazing city. You've got the sun, the sea, the sand. It's a real lifestyle city, the city of convenience, the best hotels in the world, the best infrastructure in the world. It's the biggest, the best, and it's a really great place. And people are going to see that. People will have never been in Dubai, and they'll use Expo 2020 as a reason to come here, and they'll have a great time. And they will realize that it's a place that maybe they want to come back with their family. And the more times they come back, the more they'll realize they want to buy properties, set up businesses, retire here. So anytime you put the city on the map, on a global stage, and you put the spotlight well and truly on this great place, then it's pretty obvious to say that there's going to be a huge benefit that comes in the years following.
Excellent. I have a question here from Simon. He's saying, hi, Lorenzo, is there a website or other media where we can view information about real estate opportunities in Dubai? Is there a concentrated platform that can discuss investment possibilities in the market, aside from going to individually to each one of your websites? And,
who's going to go first to their company website, lads?
Shall we just say hauser.ae? I'm sorry, hauser.com. How's that for hauser.com?
Which is HOUZA, for anyone wondering.
I think that's
put it out there.
That would be the most diplomatic way, I think, to answer this question.
Excellent. Okay. Another question from the panel. It's saying, which area in Dubai will experience the fastest growth of the next 5 years in terms of land value growth or capital appreciation? Abdullah? I think Abdullah is his connection is frozen.
I'll just be real quick. I think we've probably seen over the last 4 or 5 months the most capital appreciation in the villa communities, established villa communities, Emirates Living, Arabian Ranches, those sort of places. So, if you then look ahead, where is going to see the most capital appreciation in the coming years? Arguably, you haven't got the supply coming into villas as you have in apartments. So, you could take a decent stab that the villas will continue to outperform apartments. That said, I do think there's some very, very interesting opportunities within apartment communities, established apartment communities, the ones that really link great apartments with great living. Again, looking at places like the Palm, Marina, downtown, I think some very, very good opportunities there as well.
Excellent. Abdullah, any recommendations on areas, specific areas with the biggest potential for growth?
Well, look, it depends on how you look at growth. If we were to time the markets, it'd be nice to have a crystal ball that tells us where the market is going. But I think if you look at the areas that did well over the last few months, areas like District 1 and Dubai Hills, they've performed extremely well on the kind of villa and townhouses segment. You look at places like and the kind Jumeirah Bay Island, they've done exceptionally well. And then what kind of lagged behind is the apartments. They haven't gotten their kind of fair share of increases. And I think to John's point earlier, as consumers get priced out of the market, because prices have gone up significantly, they'll be looking back at apartments. So I'd start looking at areas like downtown Dubai Marina, the DIFC, Obviously there are areas that are up and coming, City Walk and the new La Mer area that's now shaping up. These are areas that I would start definitely looking at.
Excellent. All right. Well, before we do some of the final conclusions, we still have 10 minutes to go. I wanted to ask you about your personal challenges when running a real estate business, a real estate company in Dubai. Maybe, John, if you can take us also a little bit, what's your objectives and your plans for Espace? And we will have the same question for Richard and Abdullah. Where are you looking to go? What are some of your day-to-day challenges when running a real estate business?
Yeah, I think where we want to go as a business is we want continuous growth, and we don't want to be too focused on some kind of exit strategy which focuses on an existing group of people that are here right now. We want this vehicle to last well into the future after everybody that's here is gone. And I think that when we consider it in that way, we think of growth as being just very integral part of the business, which then people want to become part of, because everybody wants their own personal growth, and that only really exists truly if you create an entity that continues to grow. We want to grow horizontally, but we also want to grow vertically. So, that means we're focusing on two different fronts at the same time. For example, we're trying to open up into other areas that we haven't generated any revenue out of in years gone by. And at the same time, we're trying to open a mortgage division, which we've just done at the beginning of this week. So that's the kind of vertical integration that we're chasing. The challenge that we've got, which is, I suppose, a challenge that everybody will have, is constantly trying to battle to leverage our own time and to make sure that we constantly replace ourselves with people that can come in and do what we are doing so that we can go and focus on the next thing, and really leverage all the existing expertise and find the right talent to come in to effectively let us jack this thing up. And that's easier said than done, because you've got a lot of moving parts, then you've got a lot of different people, and you're effectively trying to constantly replace all the people's jobs that are here so that they can go off and chase that growth into the next part of the market. So that's a constant challenge. And another challenge that we have is that there's only 24 hours in the day, and that makes things tough.
Yeah. Richard, Betterhomes is quite an established brand here in the UAE. You've grown over the years quite substantially. Where are you looking to be? What's some of your day-to-day?
Yeah, so it's actually our 35-year anniversary this year, which you'll hear a little bit more about as we go through the year. We established back in 1986. So yeah, it's a well-established business. It's grown with Dubai, really. So that in itself creates both opportunities and challenges. I've been with the business for about 4 years. We've been in a different period, a different growth period during this last 4 years. Betterhomes itself has been growing and doing very, very well, but we've also taken a slightly different approach, a multi-branded approach across real estate, which is sort of my background from the UK, having a different brands focusing on different market sectors, which has been a lot of fun. It's been interesting. It's been, it keeps it interesting. So that's been really, really good. In terms of challenges, look, every business has challenges, every company has challenges, but I think we're all very, very, very fortunate to do the jobs we do, because we work in a fantastic city in what I consider to be one of the most exciting and fun industries in the world, and we get to work with great people. So yeah, there's some challenges. John probably hit the nail on the head. One of the biggest challenges over here is talent and retaining talent in a transient marketplace, because people go back to their home countries, don't they? Over here, which is probably the biggest challenge. My other challenge I have at the moment is one John also shares with me, which is I have a 10-week-old baby at home, and number 3. So getting a decent night's sleep. John's 24 hours in a day. I feel like I'm awake 24 hours in a day at the minute, but that's another great challenge to have. So look, we are very fortunate in life if our challenges are positive challenges, aren't they?
Indeed. Very nice. Abdullah?
Yeah, I mean, as what we tried to build over the years, and we continuously try to do is build a vertically integrated one-stop shop that has several verticals across the property spectrum. So, starting with brokerage and property management, going to holiday homes, mortgage brokerage. We expanded recently into citizenship by investment. We've done interior design and everything that has to do with the property services we've already serviced. And then I think now, as again with the challenges, it's really finding the talent to run these verticals in the right way, so that you can really master that art. Recently, we've expanded into development, so we have 3 developments that are coming up. 2 in Jumeirah Garden City, 1 in the Jumeirah Bay Island, where we're really, our focus is to find niches in the market based on what we know as a broker, and as because we know what consumers want in each area, we know what the market lacks, and we kind of
I think he breaks up a bit every now and then. Abdullah, I think we lost you for a second there. Yeah, he's not coming back on this one now. All right, I saw him reconnect earlier, so maybe he'll have to reconnect. All right, I think we're getting to the end of today's session. Maybe I'd like to get a 1-minute final bite, soundbite, final comment from each of you guys. John, what will be your final comment? Did we lose that little upswing that we've seen in the last 3 months? Are we still in the right time to go into the market? Would you suggest go in and get into the market right now?
Yeah, I would absolutely suggest that this is still the right time. I think that it would be a mistake to think that just because you've missed the first 6 months of the uptick that you should then give up the next 5.5, 6 years, or however many years it might be. And it's easy for me to say that as a real estate brokerage. Probably people are thinking, of course you're going to say that. I've backed up, I've bought myself, I've signed a contract for a Dubai Marina apartment investment property, which I'm going to put on the short-term rental market. I signed that about 4 weeks ago, transferring in a couple of weeks. So I absolutely believe in the market. I believe that the tangible value play is there. I think it's supported by a strong return on capital. And I think that the growth of interest in this city is going to continue for many years to come. People will come here and they will then decide to buy here. They'll set up their life here the way we all have done. So I am a real strong believer in the long-term viability of this market. And I think there's a lot of value to be unlocked. I think it's still very cheap on a global scale. So I'm not just saying that, I'm taking action as well. And believing in the market with my own investment, as Rick has done as well, and I'm sure Abdullah's done the same.
Excellent. Richard, your final comments for today's session?
Yeah, I mean, as John's just said, I think all 3 of us are invested not only in terms of our businesses, but ourselves in this marketplace. And I've just transferred on a 2-bed in the Springs, which gives me a far better rate of return than anything I have in the UK. So that for me is the reality of it. If people do the sums here in Dubai still add up fantastically. The other thing to also remember is, yes, we've seen a recovery in prices, but it hasn't been uniform. So there are still pockets of very, very, very good opportunities out there that will catch up, that will start to pick up over a period of time. So yeah, I think the future's bright. If you look ahead, what is likely to happen, you can't predict the future, but the one thing that I think is almost certain to happen with inflation creeping in the next year or so is interest rates are likely to go up. So any buyers need to keep that in mind. They're not going to get much better rates than they are today. So I'd firmly have that in the front of my mind if I was buying with leverage at the moment. So yeah, I think there's a lot of opportunity to have in this marketplace still to come. Excellent.
Abdullah, your final comments for today's session?
Yeah, I think again, echoing these statements, while the market, yes, has picked up in the past 4 or 5 months, let's just not forget we're coming from a very, very, very low base. There could be a lot of room for improvement. At today's rates, we are at a fraction of other global cities. demand has come up quite significantly. We're seeing a pushback in supply. We're seeing the government having this, having an effort to actually push back on new supply. All of these factors combined, I think, means there could be a stability or further increases in prices. We're seeing this in transactions already. I think what people tend to forget is, okay, well, I missed out on the market. I missed out on that boat. Not necessarily. First of all, there are areas that haven't really pushed as much. So these are kind of hidden gems. There are areas that are that have higher chances of going up because the supply is extremely low. So if you do your homework quite well, you can balance your risk and you can kind of de-risk your portfolio in a way that ensures that you make the maximum possible return over the next phase.
Excellent, excellent. Well, that has been an amazing webinar. Thank you so much, John, Richard, and Abdullah. I think we got a lot of good tips and information out of this. For all the attendees that they would like to get in touch with John, Richard, and Abdullah, you have their full names there. You can reach out to them on their own websites or through their LinkedIn pages. I think nowadays there hasn't been an easier way of reaching out to people than through LinkedIn or calling their companies individually. If you would like to learn more about what investment opportunities they have within their own companies. From our side at Creative Zone, we're here to help anybody that is looking to set up a business or set up a company, whether for investing in real estate as well as a vehicle for them to own property. I'm particularly interested to discuss with you, gentlemen, how we can collaborate further on this when you have clients that are looking to build structures for their investments into real estate or seek their residency visas and so on. These are all things that we can help you with. So I'll be very keen to sit down with you individually and discuss a few ideas on this. But again, to all the attendees, thank you for connecting. To the panel, thank you so much, John, Richard, Abdullah. We can't thank you enough for today. And we look forward to doing a lot more with you going forward.
Great. Thank you.
Thank you. Thank you. Pleasure.
Cheers.
Thank you, guys. Thank you so much.
Bye-bye.
Bye-bye.